demand is robust. Certainly demand, domestic travel for leisure passengers is as high as it's ever been, where there's no constraints as there are in the United States and as there aren't for leisure passengers. Demand is as strong as it's ever been. Business is just starting to come back stronger, but it's coming back as people return to offices, so we know that'll rebound. And then lastly, international travel still has some real constraints, but those will fall over time. We saw just last week the UK eliminated all restrictions on travel due to COVID, so hopefully other countries will follow suit, including the United States. The reality is there's huge pent-up demand for travel in all sectors, and where there aren't constraints like the domestic U.S., that demand is really, really strong.
There's clearly pent-up demand, Doug. So how durable of a recovery do you see here?
It feels really strong. Again, it's the consumer seems extremely strong. As I just noted, I mean, demand for leisure travel in the U.S. is as high as it's ever been, and business travel is coming back quickly, particularly smaller businesses, those that don't really have the large headquarters and haven't yet and have been back to business for a while. Their demand's quite strong, so it feels resilient. It feels as though as constraints go away, demand is there, and it feels like it's going to be there for a while.
Oil prices, though, have shot up. Jet fuel prices, I know you're experiencing it, 13-year highs. How much does that overshadow the financial recovery that you're experiencing?
Well, it hurts, of course, and it's unfortunate. As I'm moving on and leaving the airline to Robert Isom, my successor, I was really hopeful everything was just going to be going up, up, up. So things like oil prices, though, are a big factor. It's the second largest expense for airlines. So, but again, it'll stay there, and we'll respond accordingly over time with being able to recover it through less capacity and higher prices over time. Or it'll return to a different level where we'll also respond accordingly. But oil prices have always been an issue for airlines over time. Wherever the level ends up, we are able to figure out a way to be profitable at those levels. Right now, we can't respond this quickly, so it's going to have an impact on earnings going forward in the near term.
You mentioned the fare and capacity issue. It already feels like fares have gone up. It feels like we're paying more per ticket prices. What should we expect on that front as you do adjust to these higher oil prices?
Yeah, there's a combination of high demand. There's actually some restricted supply right now. None of us, I think, are flying as many airplanes as we'd like. Combination of delivery shortfalls and shortage of pilots at the regional airlines has not as much supply. So high demand, low supply, and high cost of production due to oil prices. All those things combine to where fares will still be, will still be good, but they're going to be higher than they certainly were during the pandemic, when fares were exceptionally low. There's still good values out there, but yeah, they're definitely. I'd be buying my tickets now if I was looking to buy for the summer.
Because
the pressure seems to be upward, not downward.
How much more can we expect?
I don't know, Sarah. Again, it's all based upon competitive issues and supply and demand. And again, right now, I think we're at competitive levels that are good for consumers, and I don't know for certain actually that they will go up. But what I do know is all those factors: supply, demand, cost of production, are all leaning toward higher prices.